Welcome back to Galaxy Grid. I'm Alex Thorne, head of research at Galaxy, and I'm joined by a great group this week. Lucas Chayan, Zach Picorni, and Jianning Wu from Galaxy Research. Everyone, hello. How are we doing?
GM.
We got a good show today. We're going to talk about Lucas is fresh back from Abu Dhabi, where Solana Breakpoint was, the big conference for Solana ecosystem. We'll get a rundown from Lucas about what was announced there and what his impressions of the conference were and the accompanying Solana ecosystem. Next 21 listed on the New York Stock Exchange. That's the Bitcoin digital asset treasury company primarily backed by Tether. We'll talk about Tether's growing and expanding universe. We'll also talk about Vanguard, Bank of America, and Schwab all coming around to crypto after all of this time. And then we'll get into some other news like Strategy staying in the NASDAQ 100 and fighting for its spot in the MSCI, Stripe launching its Tempo Testnet, the DTCC receiving a no-action letter for tokenization from the SEC, and we'll get the team's thoughts for the rest of the week. Before we get to all of that, I need to remind you to please refer to the link to the disclaimer in the show notes, and note that none of the information in this show constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's kick it right off with you, Lucas. You're fresh back from the Middle East, the big Solana conference. What was announced there? What are your takeaways, impressions? Give it to us. What was Solana Breakpoint like?
Yeah, I mean, as always, Solana Breakpoint, I think, is a flagship event for just general crypto conferences throughout the year. The energy on the ground was really great in terms of, it was in like this massive Etihad Stadium in like Yas Island in Abu Dhabi. It was beautiful venue, but like a huge venue, and it was very well filled up. So I was really glad to see that. I think there was like record attendance numbers just from like ticket sales, and there was a big hackathon hosted by one of these incubators for Solana called Coliseum. It had like, I think 9,000 developers representing 1,500 teams make submissions. So, the energy, the inclusion, the amount of people there, you could really feel like, listen, despite what's happening in the market, I think on the ground, on Solana, it continues to hum, it continues to grow. For me, I think there were some really great announcements and partnership announcements, but I do think like at a deeper level, what's happening on Solana has a lot to revolve around what's happening in terms of the tech side and like market microstructure on Solana, which is something we've written a lot about. And then also kind of this ongoing shift away from a lot of really speculative driven activity towards much more like fundamental growth, real business driven activity under this kind of modicum of ICM or internet capital markets. And so a few big takeaways for me there. Like first off, at kind of the market microstructure level there's this really fierce debate happening in the Solana developer community right now, and it was evident throughout the conference. Even before the conference started, there's a few sessions. There's MEV Day, there's Core Developer Day, and there's Block Zero Day, which is really like where I would say more of the technical discussions happen, and kind of where you get a better sense of like, all right, what's going to drive the chain's focus over the coming year. And you could see right there, like, there's this ongoing debate, like how do you make the market microstructure for a general purpose chain like Solana like competitive to host any sort of financial application, especially with the emergence of these purpose-built app chains that optimize for specific use cases. And obviously, like the big example here is Hyperliquid. And so a lot of the initial focus right now is like, how do you make perps activity on Solana competitive with Hyperliquid? You've got really two big players, Jito and Temporal. They've each got their own solutions to kind of create application controlled execution, ACE. But you also have a big push from the core developer teams to build out this thing called multiple concurrent proposals. And basically what that means is right now, all blockchains, every time there's a block, there's a single validator basically that proposes that block. And Solana wants to try to institute this very innovative mechanism that would allow for there to be multiple validators to propose blocks at any given time. And, that deals with both the censorship side of things, and it also deals with kind of making it so that any application can submit to any validator that they think will sequence their transactions in the way that they want, giving them this idea of application controlled execution. So that's kind of what's happening on the market microstructure side of things. And then I think on the activity side of things, Solana just had this blockbuster year in terms of metrics. Like basically every single presentation throughout the conference, they started out by saying like, hey, we just reached new highs in DEX volumes, application revenue, network revenue, stablecoin transfers. So, but a big thing here is like, how do you replicate this now in going into 2026, right? Because a lot of these breaks of records is due to activity that happened earlier in the year and was driven by kind of like some of this more speculative meme activity that really culminated in the Trump launch. And I don't think we're going to see something like that happen again on Solana in 2026. And so I think there's a lot of focus in shifting away from the speculative meme side and much more towards this internet capital markets driven activity. Like one very notable thing for me, Pump.Fun, right? Like the flagship application that you hear about on Solana was not even a speaker at Breakpoint. And they just hosted like one small side event at the conference. So I think like for what's going to drive that activity and allow Solana to maintain its dominance and leadership going forward, there's kind of like three big baskets we're seeing emerge right now. There's spot trading of majors, and that's really been driven by this advent of these new like DeFi primitives called prop AMMs that we've talked about and written about. We're seeing Solana Sol USD pairs on Solana basically competitive with SEX or centralized exchanges in terms of both like the spreads and volumes. We're also seeing kind of like the evolution of Solana launchpads away from just meme-driven launchpads and towards like business-driven launchpads, and that's most like embodied by what I would say is MetaDAO. This idea of ownership coins with Zach has been very early to and spoken a ton about, and also this project called Metaplex on Solana that's kind of building out a much more sophisticated launchpad. And then I think finally the third bucket is going to be trying to get Solana perpetual DEX activity really on par and regain market share that's been lost to Hyperliquid and these other chains. And the big flagship announcement that came out there was this this labs company called Ellipsis Labs, which has built out a lot of like really sophisticated market infrastructure on Solana. They announced the launch of their new perpetuals DEX, which is all on chain on Solana. It's coming out in testnet. I think there's a little bit of disappointment that it wasn't like mainnet and launched that day, but they're basically going to take this prop AMM concept and apply it to a perps DEX. So it's very innovative and very interesting. And then we also saw like Bulk, we saw Drift, we saw Bullet. These are all other big perps DEXs on Solana. Like across the perps DEX industrial complex on Solana, there's a huge push right now to be like, we need to regain market share now that we're seeing the underlying infrastructure kind of enable us to compete better with Hyperliquid. So I think I probably went on too long there. I'll stop here, but there was a ton more that I'm happy to cover.
It sounds like you're saying too, Lucas, like the future, I'm seeing like speculative meme coin driven activity like is trending down, and internet capital markets activity they hope is trending up. It seems like, well, it is trending up. Like, is it going to be a smooth transition from one to the other, from a speculation chain to a more fundamental chain? It seems like that's the hope.
I think we're seeing signs that it will be because, if you look at like a metric like DEX volumes, right? DEX volumes have actually stayed pretty stable on Solana. It's just the amount of those volumes driven by the more speculative size has dropped quite a bit. So I do think we're like Solana is in this unique place where like there's always people stepping up to try and like take market share in terms of the activity that's happening. And as meme volume has dropped, we've seen this huge competition emerge on the prop AMM side where they're competing over providing really good majors to stable swap spreads. And so that's helping supplement some of the drop that we're seeing from the meme driven volume. And then also the really interesting stuff is, yes, like this idea of ownership coins and like how do you create tokens that give holders a much better ownership of the underlying project. And I do think like it's early there, but there's very good innovation happening. We've seen some really huge fundraisers on Solana in terms of this ICO model where, teams are trying to raise, hundreds of thousands to a few $1 million and are getting, hundreds of millions of dollars in terms of deposits initially. So I do actually think like you wouldn't expect a smooth transition is happening, but there is definitely a smooth transition happening. And those on crypto Twitter probably saw like since Breakpoint ended, there's been like this huge debate that's emerged on crypto Twitter of like, is Solana the most active chain? And I my view is yes, but I think that is kind of this like view, this antiquated view for those who aren't paying attention to what's happening on Solana, that it's just a meme chain and meme volumes have died, so Solana is dying. When in reality, we're seeing an uptick across other areas. And I'll just finally mention here, like, there's stuff like what you're doing, Alex, and what Galaxy is doing that I think is going to be a little bit slower, but will play out over the long term in terms of tokenizing stocks on Solana, bringing on real world assets. We saw one of MakerDAO's sub DAOs called Keel announce, a 500 million fund to tokenize real world assets on Solana. So there's a lot of exciting stuff happening. There's a lot of good activity. And I'll just close by saying the one, maybe I don't want to be all optimistic, right? I do think there are some areas where we can see improvement in Solana. And one really notable thing is that there is not a very good kind of liquid token investing landscape. And that really stood out during the conference as well. When you think of what names in Solana are interesting besides Sol itself, it's really hard to get investors interested. And that's a huge contrast, I think, to an ecosystem like Ethereum, where you've got kind of these stalwarts like Aave, Link, Uniswap. So I do think that's an area of progress, or where there can be more progress.
Yeah, I mean, what do you think drives that progress? Do you think that it's just the presence of a lot of incumbents that have been in like this maybe like old Solana that you've mentioned and we're transitioning to a newer one? Or like what do you think gets us from the position we're in to maybe a better investable universe of liquid tokens?
Yeah, I think part of it is definitely going to come from changing the rights that token holders get and are granted. And I think we'll probably see over the next year a few existing projects take action to maybe make their tokens much more attractive tokens to hold. And then I think also there is just a lot of projects that like haven't yet launched tokens and are starting to find product market fit. And whereas the incumbents, I think, are starting to lose out on some of their market share because it's such a fiercely competitive market. There's a lot of new projects coming to light that I think over the next year will kind of launch tokens and hopefully launch those tokens in a way in this new token paradigm that we're starting to see emerge that'll make it a much more attractive liquid token investing landscape.
Yeah, and I mean, Solana is just kind of one of many that are in this scenario. Like, Alex and I spoke on Galaxy Brains last week about this. There's just kind of like a token hangover where the KPIs behind these tokens, like whether that's like revenue or TVL or whatever, are still declining with just like this kind of messy economic backdrop. But people are also starting to question, like, what does my token even get me? And like, what do I even own? And it seems like week after week for like the last month, we've seen just like, oh, project gets acquired, token holders completely ignored, or like random governance thing changes and everybody realizes that they had no control in the first place. So I mean, Solana is kind of not the only one in this boat. I think it's just like a liquid token glut in general. Yeah.
And honestly, maybe that's an area where we see these new other high performance chains that are launching try to gain an edge, right? We've talked about the challenges that they are finding in terms of gaining new users and adoption. And, maybe if they really put a lot of emphasis and focus on making sure the projects launchings have tokens that are much better quality, that helps them to some degree. But I do think, one thing for me leaving Solana is like Breakpoint is like, the moat that Solana has established in terms of just developer and user or organic developer and user interest from just being a first mover in the high performance chains is like really difficult for these other chains to break through. And it's really an advantage that Solana cannot rest on its heels now, right? Like that was one message that, the founder totally said, and a lot of leadership at the foundation said. They were like, listen, it is full steam ahead. This is an incredibly competitive market. We've have some initial success, but there's no guaranteed success for us still.
Yeah, from the TradFi perspective, I think one of the growing narrative is that Solana's like ICM and conversions of TradFi and crypto, and Solana being like the anchor of that capital markets. The other narrative that we've heard about is like the AI perspective, like agentic payments being used in high performance L1s like Solana. So have you like seen any interesting projects built on Solana that focus on AI part, and what's like Solana's perspective or potential to handle those AI workloads?
Yeah, so I think what is surprisingly enough, because I would have thought AI would feature heavily throughout the conference, and it was not a huge focus in terms of the presentations there. But I think that is partially because this kind of X402 standard that we've talked about which is starting to drive a lot of the interest in the agentic payments space, is pretty emergent, and like they probably didn't schedule talks for that. They probably scheduled the talks way ahead before that became so popular. But if you look at kind of X402 transactions and stuff like that, actually Solana is starting to kind of catch up with Base and be on par with Base. But that said, like broadly speaking, on the consumer app side, on the AI side, like I did not see a ton. I met a few teams, but I didn't really talk to any teams. I felt like, all right, this is like really innovative relative to what I'm seeing on other chains or relative to what teams on other chains are doing.
Or more to come potentially on the AI stuff. I know you're also following that in the X402 payments, which is related. Let's move on. 21 X under the ticker XXI listed on the New York Stock Exchange last week. This is a new Bitcoin treasury company, primarily backed by Tether, the world's largest stablecoin issuer. And it's Bitcoin treasury, fully funded by Tether, over 43,000 Bitcoin. Jack Mallers from Strike and sort of the Bitcoin, primarily historically the Bitcoin Lightning ecosystem, is CEO. SoftBank and Bitfinex contributed to it, which is a affiliate of Tether, and it was consummated into a Cantor Fitzgerald SPAC. So a lot of big names involved in this new Bitcoin treasury company. I wrote about this last week in our newsletter as primarily a story about Tether and its growing dominance and impact around the world and across multiple industries. Let me share some of what Tether is up to if people aren't aware of it, and then maybe get you guys' reaction. So obviously they're the largest stablecoin issuer. They have over 185 billion in circulating supply of USDT. They plan to create a Genius Act compliant stablecoin in the United States called USAT. That will be helmed by former executive director of the president's Committee on Digital Assets, or Advisory Committee of Digital Assets, Bo Hines. They own agricultural and robotics businesses and concerns all over the world, and particularly in South America. They have massive Bitcoin mining and HPC data center operations. They are, as Zach's quarterly report pointed out, Tether's the largest CeFi crypto lender in the world at more than 14 billion outstanding based on analysis of their latest attestation. They develop software across the stack in crypto primarily, but they have a wallet SDK. They also just released a new AI health application called QVAC, and they've long had a private messaging application called Keat. Tether reported in its Q3 attestation having paid more than 10 billion in dividends to its shareholders in the first 9 months of 2025. And if you analyze their treasury holdings, they probably have a net interest income of somewhere around 7 billion. In September, Paolo Ardoino, their CEO, said that the firm was raising capital to $500 billion valuation, which would make it one of the biggest companies in the world. And this is all with probably 200 employees or less. And now they also have a New York Stock Exchange listed Bitcoin vehicle, which Jack Mallers, the CEO, insists will be more than just a Bitcoin treasury company, but also an operating company as well. This has gone from a strange offshore stablecoin issuer. In 2017, they had only $1 million worth of circulating supply to one of the biggest and most important companies in the entire world. Oh, and I saw, by the way, over the weekend, Tether made a bid to buy Italian football club Juventus. I don't think the amount that they were offering in that bid was actually public. It seems like they already own shares in it, and so they're making a bid to purchase the remaining outstanding shares. I guess this is publicly traded. So really quite a shocking. I think people might be not realizing how big of a company Tether is and how across the wide breadth and scale of their operations. I mean, when you guys hear this, what does it make you think?
I mean, the scale is just insane. Like, even just from the lending perspective, like 14.5 billion in open loans, that's like 5 times the amount of total loans on Solana, and like probably over a quarter of what's on Ethereum, which is like the biggest chain for DeFi lending. So I mean, the scale is just incredible. Not to mention they grew their precious metals share of collateral, which I'm pretty sure is just gold. Or at least that's
And
what
how
the
big is
attestation
that?
notes.
It's like 10
It's like
billion or
almost
12 billion
$13
of
billion.
gold.
Yeah, as of like September 30th, it was like $13 billion, up from like 8.25 or 8.5 in Q2. So like, I mean, by crypto standards, like the magnitude of Tether is just insane. And even on like a world stage, like think about how much in T-bills and gold. Like there was like a crazy chart circulating how they're like one of the largest holders of gold outside of some of the ETFs and stuff. Like it's just insane.
Yeah, I mean, I think I think it's like trading at MNAV currently right now. So I think that's like a good indication of like broader market kind of interest in these types of vehicles right now.
You
But
mean 21?
yeah. Sorry,
Yeah.
21. Yeah. But I do think I was like reading their light paper, and they have a great line in there. It's like, it doesn't aim to outperform inflation. It's designed to render the concept of inflation irrelevant. Which I was like, all right, here we go. And I think I also think it's interesting because and I like there's a lot of skepticism over DATs right now, right? But this is a DAT where you have kind of the financial power, the scale, the breadth of Tether behind it. And I think that might make it a much more attractive vehicle in that way, because you're like, all right, well, these guys have shown they can build one of the largest businesses in the world. And now they're bringing it, kind of public in the United States. Like, I wouldn't fade that to say. But I don't know, like, do you think these guys are like, will this overtake MSTR at any point, in terms of like holdings? Is that on the table?
They have a long way to go. That's for sure. MSTR has something like 671,000 BTC and 21 has 43,500 BTC. So they're not close. And I should point out, this is from their own disclosure, but Tether is the majority owner of 21, the shares of 21. They've effectively onshored 43,000 Bitcoin in exchange for NYSE listed shares. But as far as I understand, 21 shareholders don't own equity in Tether. So it's more, if you are owning 21 under the premise that it's connected with Tether or as part of your thesis, you're betting that they and Jack Mallers, the CEO, can operate a Bitcoin treasury company, perhaps with the same skill and breadth and depth and knowledge as Tether, but not that you're getting exposure to Tether. It's to me like, they also went from persona non grata in Washington to, Paolo being at the White House, right? So it's just what a transformation. Years ago, there were conspiracy theories that Tether was printing USDT out of thin air as a way to pump the Bitcoin market. I feel like those have been widely disproven, or at least, couldn't possibly be true after all of this time. They've gone way beyond that. They're no longer just part of the crypto world. They're on the stock exchange. They're making bids for major, top tier football clubs. They own, data centers and robotics companies. It's like crazy. Like it's a genuine global conglomerate, still private, massive private conglomerate. I don't know. I don't have an index of private companies, but if it was a public company, and if that $500 billion valuation is true, they would be a top 20 company in the world by valuation. It's crazy.
And I think I saw they're actually trying to tokenize their stock, or like their private shares right now,
I mean,
Why not?
It wouldn't surprise.
So the largest competitor right now might be Circle, but Circle is not doing the breadth of business that Tether is innovatively expanding into. But I saw that there's like the news of Bybit and Circle partnering up to spend like USDC. It just seems like the other big players are merging effort to use like the distribution channels, but not in the way that Tether is doing like other lines of businesses.
They're not. And honestly, I think this is a reason why USAT is like a separate entity or a subsidiary or something, right? Like Circle's very beholden to being onshore US and soon Genius Act probably compliant stablecoin once those rules are written. Tether is sort of like managing this global empire from its El Salvador headquarters, and its onshore stablecoin is just going to be one component of that, I guess. I mean, some of that is going to come down to like how the Genius Act rules are written. Like if they're allowed to just like ring fence a version of it, I don't know. But yeah, I mean, Circle is the second largest stablecoin issue in the world, and it's not close. Like even if you don't bring in all this other stuff Tether's doing, it's not close. Just on the stablecoin in terms of size, it's crazy. Well, I guess we'll it's an octopus is what I'm saying, with tentacles everywhere. It's crazy. All right, I won't keep belaboring the point. Let's transition here. Vanguard is going to let their brokerage clients buy some of the crypto ETFs, some Bitcoin ETFs. Bank of America advisors are recommending some allocation, or able to Bitcoin ETFs. Schwab also wading into spot crypto. Jianing, what are you seeing in the convergence, the great convergence between TradFi and crypto, particularly these big wirehouses?
Yeah, so we've talked about on like the asset management side that there are two narratives unfolding in 2025. One is crypto being a financial asset, and the second one is crypto being a financial rail, which is related to stable coins, tokenized assets, stuff like that. But on crypto being a financial asset, so far, with Bank of America joining 2 weeks ago, lifting restrictions of Bitcoin allocations to any type of account for investors, we have 3 out of the 4 major wirehouses that have allowed doing that. So we've written about Morgan Stanley in mid-October, so 1 month later, Bank of America joined, and we know by working with our ETF partners that Wells Fargo has offered Bitcoin ETF on their recommended list. So the only remaining one that is not doing so is UBS, and that might have like different reasons of their own, since they're more of a global company compared to the 3. And 2 of the biggest asset management start offering crypto on the platforms. First one is like BlackRock, obviously IBIT, and the second one Vanguard, which is historically kind of hostile to crypto and saying like, quote, like crypto is not a building block of a well-balanced long-term investment portfolio. Now totally reversing their stance and allowing that. And the story is the same as like we've talked about months ago. It's just a big channel unlocking their like $30 trillion worth of asset that could flow into the ETF space, and this money will be stickier, be more long term. Um, but something that we expect is that this trend is going to go slower probably than what the crypto population want, because a lot of advisors are still hesitant to recommend Bitcoin to their investors, even though there's no restriction. There might be worry about their reputation, worry about like risk management, worry about their relationship with the clients, if the assets do perform like badly in their portfolios. So I would say it's a long term to go, a long way to go to see like a more massive adoption that we're seeing now. And probably the next step for all of these wirehouses is to like put Bitcoin ETF into a model portfolio, and that would be a milestone for further adoption.
Yeah, they haven't done it yet, right? The B of A advisors that they're allowed to recommend up to a 4% initial allocation.
4%. So yeah, yeah.
Yeah, so that's
Similar
not like
to
a model
Morgan Stanley's,
portfolio
like,
though, right? That's
So there are various steps to get to the model portfolio stage. So first, you have to onboard ETF onto the platform, and then they will have to add crypto to their recommended list and begin research coverage on Bitcoin ETF that they allow on the platform. And then the final step is putting a Bitcoin ETF into a model portfolio allocation, which then investors can opt into allocating or selecting one of the model portfolios and automatically enrolled or is being exposed to that Bitcoin exposure.
Are we at the point you think that the lower in price Bitcoin goes, the more it becomes more attractive for these people to start recommending it as an investment, or does that just increase their skepticism of the product as a whole, do you think?
I think the price going down is definitely hurting the general investor sentiments, but the fact that volatility is going down is like the biggest factor that investors talk about. And if like Bitcoin's volatility continues to go down, then you can argue it is more similar to like traditional equities or tech equities in the modern portfolio perspective, and investors will be more open to putting that into their portfolios. So we hope that price go up, but volatility go down, which is contradiction to each other.
It's definitely getting weird out there, and it's going to be, this is part of sort of the great transition. I know Jordy Visser called it the 25 Bitcoin's IPO moment, and what he meant was that the early holders were distributing to newer entrants. Like the Bitcoin ETFs this year, despite the drawdown since October, have been pretty resilient, holding most of their AUM. And you could imagine that this is sort of part of that, just like Solana trying to transition from speculation to internet capital markets. Like you've got Bitcoin sort of transitioning from speculative asset to lower volatility, longer term investment asset in traditional vehicles. We're kind of in the transition period. And so we're not quite there, but also the speculative fervor is also not quite there. We're like in a sort of in a trough here where we've got to, and it seems like we're getting close. All of these important building blocks to sort of lay before we can get to that digital gold widely adopted foundation. But it seems to me, as someone who's been watching Bitcoin for a long time, that it is coming, and it's closer than ever. So, hang in there, Bitcoiners. If you're long.
Yeah, last week the price actions weren't that good as we dropped below the 90K level for Bitcoin, but the inflows are still coming into the ETF space. So it's encouraging.
Yeah, very encouraging. All right, let's wrap it up with some other quick news takes, and we'll stick with you, John Ning, because you've been following this story. Strategy, MSTR, MicroStrategy, Michael Saylor's company. It retained its NASDAQ 100 spot, but there's this big controversy, dare I say, about whether or not it will remain in the MSCI universe of indexes. What is that story, and what do you think? What should we be watching for to see how it evolves?
Yeah, so the big controversy is that a little bit of context before that is that MicroStrategy has been in the MSCI universe ever since it was a software company. So long before they started accumulating Bitcoin onto the balance sheet. But now it has reached a point where their holding of Bitcoin is taking a significant portion on their balance sheet, more than 50%. So MSCI's investment committee is considering whether MicroStrategy, or strategy now as we call it, is more of an investment fund that offers exposure to Bitcoin rather than a profitable and investable company on its own. And if it has implications on strategy being taken out of the universe, that could trigger like around $3 billion outflow of compared to like strategy's 50 billion market cap right now. So that could be a 5% like price action if strategy gets taken out of MSCI. So what happened last Friday is that during the annual reconstitution of the NASDAQ 100 index, strategy remained in the index despite the controversy that the market was speculating about on MSCI side of things. But I would say that all of these major US equity indexes have their own strategies and their own focuses. And so you have NASDAQ 100 being more of a quantitative, a more rules-based selection mechanism, where MSCI has more of a selective and qualitative evaluation, focusing on investable universes. And then you have like Russell's giving exposure to the whole US equity index or universe. So it is a really kind of a question on whether a DAT, as we call it, is it an investment fund, and is it still operating company that we can argue that should it be placed into a unique vehicle, should it be put in a special index like what Bitwise has designed for the stats. So it's a question on where the DATs will go given then NF are coming down, their strategies are innovative and not yet well understood.
Sounds like MicroStrategy needs to start selling SaaS products again, huh?
Yeah.
Time to relaunch the yeah. What were they selling before? It's like some HR
software management program, I think,
yes.
for consulting. Yeah. Maybe they should make more copies and sell that.
What are the consequences if they get in or stay out? Like, why does this matter?
Because the money behind all these indexes as investments seek broad-based exposure is humongous. So you have 3 billion holding from the MSCI indexes universe alone right now on the strategies in stock. And then if it gets taken out, the 3 billion basically is gone. And if other indexes follow this action, that we estimate around like $9 billion would be sold from like the strategy stock.
I see. So it's passive index investors buying the MSCI indices or the NASDAQ 100. And if it's not in there, that it's a loss of demand for MSTR stock.
Exactly.
Is there any other crypto stock in there?
In the MSCI, that's a good question. I probably have to look back into that. But I know that Tesla is in a major index, but Tesla, again, is more of an operating company selling cars rather than...
Right. They hold Bitcoin, but it's not a huge portion. When do we find out about MSCI?
February next year, so in 2 months.
Well, it sounds pretty important. It's gonna be interesting to see. I did see there was something like over 1,000 comments sent in to MSCI begging or arguing that MSTR should remain in the MSCI indices. So I guess we'll see what happens. Let's wrap it up here. We've got Lucas. Tell us, Stripe, the major payments company Stripe, has launched the testnet of its new L1 Tempo. They also have been acqui-hiring teams to help build out the Tempo ecosystem. I saw One Wallet team was acquired. My friend Ria Butoria has gone to Stripe to work there on Tempo. Tell us, Lucas, what's the latest in the Stripe Tempo ecosystem?
Yeah, so Tempo is a new layer 1 blockchain coming to market. It is permissionless, but it is probably, a lot of people view it as like kind of a permission centralized chain because it's got Stripe behind it, but it's being developed in partnership with Paradigm as well. And they launched their testnet last week. So I do think it's a kind of momentous occasion that they're kind of the first, them and Circle are kind of the first of these kind of like Circle is crypto native, but like more established institutional companies launching a public blockchain. And so I think for me, there's like 2 big trends we're seeing here play out that are emblematic with this launch. Like first off, the age of enshrined chains have arrived. Like this is a very opinionated chain in terms of kind of what you can do on it. It's got dedicated payment lanes. Stable coins can be used for gas. There's a built-in stable asset DEX for it. And I think this is a trend that we'll continue to see play out. It's similar to kind of the app chains. The interesting thing for me, the news came out while I was at Breakpoint, and I was thinking to myself, I was like, you can do all of these things on Solana, right? But it's just third-party integrations instead of being built in at the network and protocol level. And so the key differentiator here, I think, is really on the distribution side. And that's where I think, we've had all these new chains launch and there's a dearth of users and activity. I don't think we're going to see that play out on this chain. If you look at kind of the partnerships that are laid out here, they've got all of these huge companies that they work with, DoorDash, Klarna, all of these names that anyone who, is in the US and basically has an app store would be very familiar and probably use on a daily basis. And so I'm excited to see not only like these products start to integrate stablecoin payments on their back end to facilitate a lot of their business. I'm also excited to kind of see the permissionless side of this play out, because I do think that this will incentivize a lot of developers to come in and try and build products on top of here that are regulatory compliant and can be integrated with some of these offerings that these products have. And that's a very interesting confluence that we haven't really seen play out before.
And this is the second institution-based L1 that's been launched this year.
The other one being ARC from Circle. Yeah.
Yeah.
And both
Is
are,
ARC on
yeah.
Testnet though?
I don't know if ARC has hit testnet yet. To be, I think Tempo is the first.
I think they're the first one.
Yeah.
Oh.
So
Well, if Stripe can lock down all these like sort of fintechs and TradFis, and that's sort of your thesis here that's interesting. Like if DoorDash is on Tempo, and then DeFi developers want to, I don't know, build ways to like collateralize your DoorDash order history or something, as part of, or Klarna is maybe a better example. At least it's financial, right? Stripe brings the tech and the distribution, and because it's not permissionless to operate the chain, right? It's going to be like a federated corporate validator set, but they're saying it'll be permissionless to deploy apps upon.
Exactly. So you can finally, leverage your Chipotle burrito to speculate on the next election. Maybe
it honestly sounds a lot like Diem, Facebook's Libra project, which at the time launched with a giant swath of corporate partnerships, Uber, PayPal, and whomever. So it's going to be interesting to see. All right, let's wrap it up. We've been going for a while here. Give me what's interesting, what's top of mind, what are you following for this week? It is the last week before Christmas, and then New Year's comes. It is December 15th as we record. What are you following this week, everyone? Maybe Zach, you go first.
Yeah, I'm following. The news came out maybe 2 hours ago, but Circle acquired Axelar. It looks like the bridge and the IP. And there seemed to be an explicit message that token holders will like kind of have no connection to the acquisition, which is like the second or third such thing we've seen over the last month or so. We saw it with Tensor, and Padre and Pump Fun, and now this. Pump Fun kind of came back and made the Padre token holders like somewhat whole. They just took like a snapshot at the time of the announcement, and they were like, here, you get the equivalent US dollar value of whatever you were holding at the time. Tensor, to my knowledge, still completely ignored. So it'll be interesting to see what happens here. If Circle will allocate to the Axelar holders, or if the folks at Axelar who benefited from the acquisition will turn around and distribute some to the holders, but that all remains to be seen.
A lot of this week is packed with macro data. So we have like CPI coming up, retail sales, we have non-farm payrolls, and we have a few major European-based governmental entities trying to make their decisions on rates. So that would be a lot of noises and signals to sort through to see where crypto market sits. But what's more exciting is that we, as a team, is putting out our 2026 prediction report, 26 predictions for 2026. So I'm most excited about that.
All right, nice. And it looks like we have another slate of hyped token generation events coming our way, either this week or maybe next week. I think the premier name is Lighter, which is a competing perpstex, or one of the leading perpstex that's overtaken Hyperliquid in volumes recently. And I think beyond just the token performance and how the token does after launch, I think the interesting thing here is Hyperliquid has been losing a lot of market share recently, and a lot of people speculate that's from a lot of mercenary farming activity. Do we see things kind of balance out now that Lighter has its TGE? Does activity remain sticky there, et cetera, et cetera? And then also the other one on the radar, which I don't think will happen before end of year, but does keep popping up, is Mega ETH.
And the last thing I'm following, last week, the DTCC received a no action letter to allow it to do tokenization stuff. That's the clearinghouse that sort of the vast majority of the American capital markets use to store and ledger stock ownership among DTC participants. That's like broker dealers like Fidelity, Schwab, whomever, also some sophisticated market players that use DTC, pretty much everybody actually. No mention in the no action letter of their ability to let those tokens go into DeFi, which I know is a big part of both the fintech and crypto industries asks of the SEC, but nonetheless, like laying the foundation for more tokenized U.S. capital markets. I think you're going to see more stuff about that over the next coming weeks. So something I'm following closely. That's it for this week's episode of Galaxy Grid. Thank you to Lucas Chayan, Zach Pokorny, and Jianing Wu from Galaxy Research. Everybody have a great week, and we will catch you next week.